Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is Monday, December 4th, first Monday of a new month. Really, 2023 is flying by. It'll be over in a blink and we'll be on to 2024. Hopefully you've had a great year of investing. And if you have not started your investing journey, go ahead and hit that subscribe button down below and join the Vested Interest community. Join us on our journey to financial freedom. And I share videos like this Monday through Thursday where I take a look at a stock on the day. Today we are going to take a look at Vale. It's out of the materials sector. It's a mining company. I also share my portfolio every Sunday morning, just so hopefully those of you who are out there who have not started a dividend growth portfolio can see that you too can do it. You don't have to be a financial guru or have a financial background or a degree in finance. I do not. I'm just an average person who works a 9-to-5 job, have 2 kids, I'm married, live in a decent house here in St. Clair Shores. And if I can do it, I grew up with 2 parents who didn't even graduate high school, no financial background. As a matter of fact, I would say they are terrible with finances, but that's a story for another day. But if I can do it, you can do it. So again, join us on our journey to financial freedom. Hit that subscribe button down below. Hopefully it is beneficial to you, this type of content, and it encourages some of you out there that you can do it too. Let's jump right in. Take a look at Vale. Again, out of the material sector, this is a mining company. And if you want to know more about this company, check them out at Vale.com, ticker VALE.com. That is their homepage where I pulled this information from. We were founded on June 1st, 1942 as Compañía Vale do Rio Doce. And I may have butchered that for my Brazilian friends out there. Apologies if I butchered that. Over the years, we became just Vale and built a history. We pioneered the world as a global mining company. We were present in more than 20 countries, sharing the passion for our business. We face challenges, and we continue to learn every day. We have advanced ever since the first ore extracted in Itabira, Minas Gerais. Since then, we started to work in logistics through our railroads, ports, and terminals in energy and steel making. So there's a couple things here I would really wanted to note. They do have a presence all around the world, some of their major presence being in Malaysia, Oman, Japan, Canada, China, Indonesia, United Kingdom. As I said, several other countries as well, but these were the ones that showed up the most prominent on their webpage. They also don't just do mining. They do have their own logistics company, railroads, ports, ships. So they do their own internal logistics as well. And they have their hand in steel. So they do make a lot. Their iron ore, they not only mine it, but then they also turn it into usable steel as well. So they have their hands in a couple different sectors, but they are out of the material sector, a mining company. That is their bread and butter. And this is a bit of a sneaky play on the EV outlook here. They do provide some of the mining materials that they mine are used in the EV production of batteries. And I believe, if I'm not mistaken, I read a while back an article. This was one of the main sources for Tesla, and I believe a couple other car companies as well are getting their material from this source. So again, Vale.com, that is their homepage. Let's keep rolling. Now, the reason we are taking a look at them, down 3.71% on the day, big drop on the day. We are talking about Vale SA, ticker VALE, out of the material sector. This is a mining company out of Brazil. Closed out the day at $14.80. 52-week range as low as $12.22, as high as $19.31. So they are closer to their 52-week low. I am long Vale. We'll see my position here in a little bit. Average volume 21.7 million. Today was 28. Just a pretty steady sell-off. Looks like they tried to recover a little bit around noon, but then back to a sell-off throughout the day. A little bit of a recovery as well right there at the end of the day. Market cap of $63.682 billion, a beta of 0.83, so they are less volatile than the overall market. Price to earnings ratio is low at $7.05 per share, but mining companies tend to be low, so you'd want to compare this to other material companies, mining companies specifically in this sector. Earnings per share, EPS, is sitting at $2.10 per share. They do not have another earnings date. I'd have to get into the weeds and find out when exactly they are reporting it. I'm assuming it's because it's a foreign company. For dividend is $1.26 paid out on the year. They pay out on it's not quarterly. Sometimes it's 2 times a year, sometimes it's 3 times a year. We're going to see that here as well. I have them listed in my tracking spreadsheet as a semi-annual payer, so I only count on 2 payments a year, but they do on occasion pay out 3 times a year. We'll see that here in a minute. Ex-dividend date was November 22nd, so we just passed that. Looks like they're going to pay out on December 8th, so if you are a shareholder, expect that dividend payout on the 8th. I will be getting mine, so I'm looking forward to that. And I like to get into the statistics here. We're going to look at dividend yield theory to see if this one is presenting any value. To do that, we go into statistics, we go down to dividends and splits. We look at the 5-year dividend yield average of 3.11%. We compare it to its current 8.20%. That is much higher. So since it is higher, that speaks to some undervaluation. Since it is a higher dividend yield currently than their 5-year average, it is potentially undervalued according to dividend yield theory. If this was under the 3.11 5-year average, it would speak to overvaluation. They are inversely correlated. Another one I like to look out here is payout ratio. Low payout ratio on this one, 37.71%. But you want to understand that with mining companies, they are going to be driven, their dividends and their payouts are going to be driven specifically by how the materials are being priced at the time, and they do fluctuate, right? Gold, silver, nickel, iron ore, they will fluctuate over time. So when iron ore and nickel prices are really high, this company is going to do really well. Whenever they drop down really low, this company is not going to do as well, and it will impact their dividend. They are not steady like a lot of companies that just have the 35-cent dividend 4 times a year, and then they raised it up to 37 cents the next year. This particular company is going to be driven by whatever metals prices are. So keep that in mind with this type of company. Now, I like to get into the financials. A lot of good information here. You're going to find their balance sheet, their income statement, their debt to equity ratio. How are their margins do it? Are they growing revenue over time? Are they buying back shares? Are they paying down debt? A lot of good information there. We're going to look at free cash flow. We want growing free cash flow over time because typically if a company has growing free cash flow, they have growing dividends. That's what dividends are paid out of, the free cash flow created by the company. So we went back to 2019, see 8.4 billion here. Up in 2020 to 9.8, huge jump up to 2021 to 20.6, and a big drop down in 2022 to 6 billion. So from 21 to 22, big drop down. Looks like so far to date here in 2023, they're back on track to about 4.6. I don't know if they're going to beat last year's 2022 numbers, but it doesn't look like they're going to make it back to the 2019. So I would not say they have growing free cash flow overall, though they are repurchasing a lot of their own shares here over the last several years. So I do like that. That does help, and that does offset some of that. So maybe if you added in the repurchase of capital stock to this year, they would beat the 2019. Let's just call them flat in free cash flow on this one with the repurchase of the shares. I'd have to do the math and see exactly where that's at, and the year's not over. So they indeed could beat the 2019 record here for 8.4 billion. So I'm going to call them flat. Now, that was Yahoo Finance on the previous page. I always recommend more than one source. You should look at more than one so that you can make sure the information you are getting is accurate and up to date. I like stockanalysis.com as my second source. You pick any sources that you like, but again, just make sure you're looking at more than one. Don't just take one source as the gospel. They can be wrong. Their information can be outdated. They could be biased. You never know. Just make sure you're utilizing more than one source out there. Stock Analysis is a good one. They have a free service. They have a paid service as well. I am not affiliated with stockanalysis.com or Yahoo Finance, just 2 sources I like to go to. And they have 9 stock analysts that have taken a look at this. They have a low estimate of $15. It currently sits lower than their lowest estimate, so it would be a 1.35% increase from where it currently sits to hit their low estimate. Average estimate of $17.72. That would be a 19.73% increase in the stock price. And if it happened to hit their high of $20, that would be a 35.14% increase in the stock price. All the while, you collect that dividend yield that looks like about 8%. Now, I like to get into the statistics here and look at return on equity and return on invested capital. I like 10% or better. This tells you how efficiently a company is at reinvesting back into themselves, whether that's buying back shares, whether that's reinvesting into the company, paying down debt, whatever they're doing with their free cash flow. This tells you how well they're doing it. And return on equity sitting at 53.4%. Very, very high number here. 27.99% for return on invested capital. Smokes at 10% I'm looking for both of them. Now, the only thing I didn't like so far about this one is they did not list an earnings per share forecasted growth or a forecasted revenue growth. So I need to get into the weeds a little bit and see what's going on here. I looked back. I did a video on this about 4 or 5 months ago. They didn't list it then either. So again, I'm assuming this is because they are a foreign company and just don't release that information. If anyone knows or has a source that does list that information, go ahead and drop it down in the comment section below. Now on to the dividends. Again, I did say I am long this company. I have 243.516 shares. They're going to pay that D, stands for dividends. That's going to account for the dividends they're going to pay out here in a few days. I believe it was on the 8th. Now, my cost basis is $13.68. So I would prefer it under my cost basis. I'm not really looking to add to this one. It's, I've got $3,330 into it. It's currently worth $3,604. I am up $273.21 or 8.2%. But I don't really focus on that. I'm focused on the dividends that are paid out. And if it did slip back into under this cost basis at $13.68 or even close, if it dropped back into the 13s, I might add a little bit more here and maybe run this up to get it to a even 250 shares. For right now, I'm just happy collecting the dividends. As we saw, payout ratio of 31.7%. Now this says not applicable for dividend growth and the payout frequency not applicable. Now again, I'm assuming that is because they do not pay consistently, 3 or 4 times a year. It's typically twice a year. You can see we went back to 2018, March, they paid in March 14 cents. August 3rd, 2018, they paid 39 cents. So there's twice. And then in 2019, they only paid out once in December at 34.7. So that's a little bit lower. Again, this is why I'm saying it'll be based on the metal prices, right? How much they pay out dividends. One time again in 2020. And I'm assuming this is because of the COVID-19 stuff. But September 2020, they paid out 45 cents. Then they're back to the March-September timeframe in 2021, paying out 76 cents here. But then they paid out in June, so it was like another dividend in June, 43 cents there. The September one was very nice at $1.59. Then in 2022, again, March and December. So it looks like March and December are pretty common, but they threw in another one here in 2022 in August, right? So 71 cents in March, 68 cents in August, 5 cents in December. So they're kind of all over the place with dividends, but they are paying out consistent dividends, it looks like, every year. So far in 2023, 3 payments here. March 14th, again, there's that March date, 35 cents. August, looks like August or September, they pay again, or June to September in that time frame, whenever they're paying out 3 times a year. That's around when they do it, 40 cents in August. And November 22nd, 2023, this is that December 8th payment right here. They'll pay out 46 cents per share in fractions of a penny here. So that is Vale. Is it in your portfolio? Is it one you're watching? Do you like other mining companies better? Let me know down in the comment section below. This is the vested interest stock screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I'm interested in investing in it. And if it's in my portfolio, just like we did, I review from time to time and see if a company is still meeting my stock screener to see if I want to add to it or if it needs to be pulled out of the portfolio, if it no longer meets my criteria, or if I just want to hold on it and see how it's doing. That's part of the reason we looked at Vale today. Understand the business. That's where we started. Growing free cash flow. We looked at that. Growing dividend. It is growing over time based on the metal prices, though, so keep that in mind. Dividend payout ratio 75% or less. This one was down in the 30s. Check valuation based on dividend yield theory was potentially undervalued based on dividend yield theory. Buy below current cost basis or within 15% of its 52-week low. I think it is right around 15% of its 52-week low, though I'd need to do the math. 12.22, I think, is what it was. Hold on one second, and I can do the math. Let's see here. Sorry, I'm trying to find a calculator real quick. Let's say it was 12.22, I believe, times 1.15. Nope, it would be a little over. It needs to be around $14.05 or less to be within 15% of its 52-week low. So it did not meet that metric there. Return on invested capital, return on equity is 10% or better. We'd have to find out about the earnings per share growth. I like 5% or better. Price to book is good for financial companies, and if you want to use it for other companies, you need to compare it to other companies in the sector. So you need to look at other mining companies for this. Need to meet 5 of 8 to be investable. Financials needs to meet 6 of 9. And that does not mean run out and buy it if it meets 5 of 8. That's where I would put it into my watch list, and then I would do more of a deep dive into the financials of the company, the balance sheet, the income statement, see where they're at on that one. I do like this company. I am long, but that doesn't mean you should add it to your portfolio. Well, that is it for this one. Really appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Help me grow this channel and get the word out. In my opinion, the best way to financial freedom is dividend growth investing, and we all want to get out, or I hope we all want to get out of the rat race, the working lifestyle, the 9 to 5 working for somebody else's job. And that's what we're looking to try to spread the word on here in the vested interest community. So again, hit that subscribe button, hit the notification bell so you're notified whenever we put out any new content. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below. And thank you for stopping by. We'll see you in the next one. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risks. You can't lose money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.